In this video, I'm going to talk about investing in the stock market, and I'm going to talk about correcting a fundamental flaw in investor logic. But it's critically important that you don't misinterpret any of this as an investment recommendation. If I don't know you and I don't know anything about you, then there's no way for me to know what investment advice would be good for you or whether or not you should even invest in the stock market. And you might ask, wouldn't investing in the stock market be good for everybody? And the answer to that is no. There are some people who are at a point in their lives where they would be better served to focus on investing in their education. And there are some people who would be better served to focus on paying down debt. And there are some people who don't know how to invest in the stock market. There are people who don't know how to analyze a company's revenue or a company's source of revenue or whether a company's revenue is increasing, or the margin of revenue that company is able to hold on to after they have covered their expenses. And those are some of the critically important metrics that determine whether a company is making money or losing money. And you'd certainly need to be able to read that to determine whether that's a company you'd want to invest your money in. The reason I focus more of my content on the philosophy of personal finance over investment strategy is that there are too many people who fail to hold themselves to the same standards that they should be holding a company to. And the rules are the same whether you are an individual or a company. You want to see more money coming in and less money going out. The rate at which you can increase revenue or income and the rate at which you can decrease spending, those help determine the rate at which you could expect to see growth, whether you're an individual or a company. And even if you are able to identify a company that is growing and worth investing in, or if you're able to hire someone who can do that for you, if you're not putting yourself in a financial position to afford to buy enough shares over the long run, then it's not going to matter in the long run. What's going to matter more is whether or not you are applying that same level of scrutiny and analysis to your own balance sheet and your own budget, and whether or not you are focusing on how much money is coming in and how much money is going out in your own finances to put yourself in a position to invest more money in the long run and accumulate wealth over the long run. That is the flaw in a lot of investors' logic that needs to be corrected.